Well, yes, the spotlight is back on the IT sector, and today we are tracking a bit of a negative news flow coming in for the entire IT sector, and that is because the read-through of the latest event is a tad bit subdued. Now, what has really happened is a couple of companies like Wipro, etc., have delayed the payments, and that is the variable payments to some of the select employees. In fact, for manager and above levels, there will be no variable payout for the June quarter, and as well as the freshers and lower levels, they will get almost 70% of their variable pay, and not really the 100% that we were seeing recently. In fact, we were seeing the trend going higher than 100% the variable payout as well. That is likely to end now, and the reason that the companies have given is that the margin has been under pressure. That is on account of inefficiency in talent supply. There has been pressure on margins due to the inefficiency in investment in technology as well, and that is why they have said that for now at least they are delaying their variable payout. And Wipro is not really alone. TCS has also done it. They have delayed it just by a month, so maybe we will not see a big impact come in for TCS, but for Wipro there will be a positive impact in terms of the margin flow, because of course over the last 4 to 5 quarters we have seen that supply side pressures have really dampened the margins by a huge lot. In fact, for Wipro the margins have come down from 18% level all the way down to 15%, and attrition is something that has been plaguing the entire industry. The expectation was that attrition has already peaked out, or at least it will peak out in Q2, but given the fact that there is some negative news flow when it comes to the headcount trends, we are expecting that attrition peak out might get delayed to Q3. But the underlying thing that really needs to be watched out for is the fact that the talent war that we were seeing between companies seem to be ebbing. This tells you that the job switching that we were seeing, or the fact that the employees were getting huge raises of around 30 to 50% when they used to switch, is ebbing down, and that is why the companies now have the leverage to actually hold back on the payments that they were doing to the employees, and that will support the margins in the near term. Though attrition might be a bit higher in the immediate quarter, that is Q2 and Q3, it might remain high, but margin is something that is likely to improve. But the underlying thing to watch out for would be the demand trends, and this is something that the analysts are worried about, that perhaps this is the precursor to the fact that demand is slowing in the coming quarters, and that is something to watch out for.